Professional ethics. Fundamentals of professional ethics. Ethics. Ethics are principles which tells us about what things will be considered as good and what things will be considered as bad. Professional ethics for CS. These are the principles which tells us what CS should do, that is good, and what CS should not do, bad. Sources of professional ethics. Professional ethics is prepared from CA Act issued by the Parliament, rules made by central government as per requirements of CA Act 1949, regulations issued by Council of ICAI as per requirements of CA Act, guidelines, directions, clarifications issued by Council of ICAI apart from requirements of CA Act. International Code of Ethics. International Code of Ethics is an important document or booklet prepared by ICAI to explain CS about what activities they can do, that is good, and which activities they can do, that is good, and which activities they cannot do, bad. International Code of Ethics contains 3 volumes: volume 1, volume 2, volume 3. Volume 1, it is adoption of International Code of Ethics for professional accountants, which is issued by International Ethical Standards Board of Accountants, IESBA. It is conceptual framework which explains 5 fundamental principles of ethical conduct, how to identify threats against these principles, and how to apply safeguards to protect this against these principles. These are applicable from 1st July 2020. Volume number 2. It explains important sections of CA Act 1949 and classes of both the schedules along with guidelines issued by Council of ICAI, which helps in interpretations and implementation. Volume number 3. It is a collection of judgments passed by courts, appellate authority, council, and its committee and board. Next, 5 fundamental principles of professional ethics. Hint is OCBI. O, objectivity. C, competence, professional competence. And due care. C, confidentiality. B, behavior, professional behavior. I, integrity. Next, motto of ICAI. ICAI, it is based on ethical principles. It says, ICAI motto is Ya Isha Suptesh Jagriti, which means eternal vigilance. That means awakening when the world is asleep. Be alert even if world is not. Be ethical even if others are not. Act in public interest even if others are not. This is the motto of ICAI. Overview of Code of Ethics. Code of Ethics Volume 1. Volume 1, under that part number 1. It is applicable to all professional accountants, CS. It is mandatory to comply with the code. It consists fundamental principles of Code of Ethics. There are 5 fundamental principles of Code of Ethics. Hint is OCBI. Conceptual framework for understanding and implementation of each principle will be there here. Part number 2, applicable to professional accountants in service. Such professionals includes professional accountants employed, engaged or contracted in executive position or non-executive position in regulatory or professional bodies, public sector, commerce, industry or service, education, not for profit sector. This part 2 is also applicable to professional accountants in practice when performing professional activities as an employee in CA firm. Part number 3, applicable to professional accountant in practice when performing professional services. Part 4, independent standards applicable to professional accountants in public practice when they are providing assurance services. Part 4 contains again 2 parts, subparts, Part A, Part B. Part 4, subpart A, provide independence requirements for audit and review engagements. Part 4, subpart B, provide independence requirements for assurance engagements other than audit and review engagement. Next, glossary. It defines and explains important terms, abbreviations used in the code. Example, term audit engagements includes both audit and review engagement. Structure of section or subsection code. Each part of the code is divided into sections and sections are further divided into subsections. These contains following information. Introduction. It addresses the subject matter. Requirement. It establishes general and specific obligations with respect to subject matter application. It explains, gives suggestions, illustrations to, assist in implementing the requirements. Part 1, Code of Ethics, Volume number 1, Section 100, Applicability of Code of Ethics. It is applicable to all the professional accountants. If any law precludes, that is excludes applicability of any part to professional accountant, then those part will not be applicable, but rest of the parts will be applicable. Section 110, Fundamental Principles. These are the basic principles on which Code of Ethics are based. Hint is OCBI. O, objectivity. C, professional competence and due care, confidentiality. B, behavior, professional behavior. I, integrity. Section 110, requirements. Responsibility of the professional accountant. Professional accountant is responsible to comply with all fundamental principles. These principles will establish standard appropriate behavior of professional accountant. Code of Ethics provides the conceptual framework to comply with these principles. Conflict. If professional accountant faces a situation where complying with one fundamental principle conflicts with complying with other fundamental principle, then professional accountant should consult following: others within the firm or employing organization, legal counsel, those charged with the governance, ICAI. Consultation does not reveal the professional accountant responsibility to exercise the professional judgment to resolve the conflict, or if necessary, professional accountant may decide to disassociate. That means withdraw from the matter. Document the following. What are the how many what are the things need to be documented? Substance of the issue, details of discussion, discussion made, rationale for the discussion. These are the things which need to be documented. Next, subsection 111, integrity. What to do? Professional accountant shall comply with the principle of integrity, which means to be honest and straightforward in all professional and business relationships. What not to do? Professional accountant should not knowingly be associated with reports, returns, communications, or any other information where professional accountant believes that the information contains materially false or misleading statement, omits or obscures, not easy to read, required information, otherwise it will become misleading. Content statements or information provided negligently, or it will not be considered as breach of above requirements if professional accountant provides modified report in respect of these matters, or else a professional accountant shall take steps to disassociate, that means withdraw from that information. Next, subsection 112, objectivity. What to do? While accepting engagement, professional accountant shall not undertake assignment if there are circumstances or relationships which unduly influence professional accountant's judgment. While working, comply with the principle of objectivity, which means not to compromise with professional and business judgment because of bias, conflict of interest, or undue influence of others. Next, subsection 113, professional competence and due care. What to do? Maintain professional competence and work with due care so that work is done as per the relevant legislation, technical and professional standards. Competence. What do you mean by competence? Attain and maintain professional knowledge and skills required to give services to the client. Work as employee in organization by working as an employee in the organization as required by above. Due care. Due care means implement and act diligently as required by above. Implementation. For maintaining professional competence, there should be continuing awareness with respect to legal requirements, technical, professional standards, and also business developments. For this, professional accountant should undergo continuous professional developments, that is seminars, training courses, etc. For CS, there will be CPRs, that is continuing professional education, Rs. Also, take reasonable steps to ensure that people working under professional accountants authority having appropriate training and supervision. Next, due care implementation. Due care, it means performing work carefully, thoroughly, and on timely basis. Professional accountant should exercise sound judgment in applying these requirements. Inherent limitations shall make clients and employing organization or other users aware of inherent limitations in services or activities. In audit, there are some inherent limitations. Because of that, this professional competence and due care may be affected. May be affected. Next, subsection 114, confidentiality. Basic principle: comply with principle of confidentiality. That means keep information obtained as a result of professional or employment relationships confidential. Obligation of professional accountant: follow below given obligation of professional accountant. First, prospect to client: maintain confidentiality with respect to prospect to client or employing organization. Office party: maintain confidentiality within firm or employing organization. Home: be alert to the possibility of inadvertent disclosure in social environment, in particularly close associate and family members. Next, call from broker: don't use confidential information for personal advantage or advantage of third party. Last day at client: maintain confidentiality with respect to assignment or job which has ended. Team meeting: take reasonable steps to ensure that team members, advisors maintain confidentiality. Exception: confidential information should not be disclosed unless required by law, authorized by client, professional duty, or right to disclose. Further elaborations of exceptions required by law. For example, law may require professional accountant to disclose information in course of legal proceedings where there is infringement of law. No such law in India as on today. So there is no law requirement to disclose the confidential information in India. Next, authorized by client and not prohibited by law. Right to disclose and not prohibited by law. Hint is RILS. During peer review or quality review, during inquiry or investigation of a professional accountant, during legal proceedings against a professional accountant, as required by technical and professional standards. 4 points to be considered while making disclosure. Hint is HATS. Is it harmful to the client or employing organization or third party? A. Address it to appropriate recipients and further ensure that appropriate recipient is selected. T. Type of communication: medium should be proper. S. Information should be known and substantiated to the extent possible. Type of communication should be in written and encrypted and secured form. Next, change: whenever we are moving from one client to another or one employing organization to another employing organization, we are entitled to use our prior experience but should not disclose any confidential information even when professional relationships has ended. Subsection 115, professional behavior. What to do? Comply with principle of professional behavior, which means comply with laws and regulations applicable to the particular assignment or employment. Avoid any conduct that might discredit the profession. For example, professional accountant shall not knowingly engage in any employment or professional activity which impairs integrity, objectivity, and good reputation of the profession. Next, another example: professional accountant should not do any activity in which third party would likely to conclude adversely with respect to reputation of the profession. Clarification: with respect to promoting himself and his work, the professional accountant must be truthful and honest. What are the things he should not do? Exaggerated claims for services or regarding qualification or experience professional accountant has. Disparaging, that is insulting references, or unsubstantiated comparisons to the work of others, going against the guidelines of advertisement issued by council. Whenever professional accountant is in doubt with respect to advertisement, professional accountant should consult ethical standards board. Threats, evaluation, and safeguards. Codes specify that a professional accountant should identify threats with respect to fundamental principles, evaluate threats which are identified, address the threats by reducing them to an acceptable level or eliminating them. Threats: there are 5 types of threats. Hint is I am fair. I, self interest threat: circumstances in which there are some financial or other interest which will influence professional judgment or behavior. F. Familiarity threat. There exists close or long relationship with the client or employing organization, which will make professional accountant sympathetic towards them while accepting or doing their work. Next, A. Advocacy threat. Circumstances in which professional accountant is supposed to promote, that is, advertise clients or employing organization or positions, and at the same time, in other assignment, professional accountant is to report objectively. I. Intimidation threat. Circumstances in which professional accountant is directly or indirectly pressurized or influenced, because of which professional accountant is not able to act objectively, or self-review threat. Circumstances in which professional accountant during his current assignment is supposed to evaluate results of previous judgments or activities which are performed by him or another individual within the firm or employing organization. Examples: circumstances that may create self-interest threat. Hint is BP Ltd. Financial interest, that is direct financial interest on equity, debt, loans, etc. Undue dependence on total fees. Personal gain may arise because of the access to confidential information of the client. Other interest, possibility of losing client, close business relationship with the client, potential employment with the client. Above bifurcation is only for ease of memorizing the examples. Circumstances that may create familiarity threat. Member of engagement having close or immediate family relationship with director, officer of the client, with an employee who is in position to exert direct and significant influence over subject matter. Former partner of the firm. Former partner of the firm is a director, is an officer, is an employee who is in position to exert direct and significant influence over subject matter, having long association with the client. Circumstances that may create advocacy threats. Personal professional accountant is providing assurance services to the client and at the same time promoting shares of the client in the market by way of IPO, FPO, initial public offering, further public offering, etc. Acting as advocate on behalf of the client in litigation or disputes with the third parties, lobbying in favor of legislation on behalf of the client. Next, circumstances that may create intimidation threat. Threatening with dismissal or replacement if professional accountant disagrees on a professional matter, informed that planned promotion will not occur till professional accountants agrees with inappropriate accounting treatment, pressurized to agree with judgment of client because client has more expertise on matter in the question. Professional accountant accepted a significant gift from the client, and now client is threatening that he will make this information public. Circumstances that may create self-review threat. Professional accountant implemented financial systems, and now he is supposed to evaluate and issue assurance report on the operations of same financial systems. Professional accountant prepared original data which is used to prepare statements, and now he is supposed to check and issue a report on the same. Unique threats. Specific circumstances may give rise to unique threats which cannot be categorized in the five types of threats. So, professional accountant should always be alert for such circumstances and threats. Example: blackmailing personal information, religion, or political threats, or kidnapping parties to give wrong reports. These are the threats which cannot be categorized into above five categories. Next, evaluation of threat. What to do? Whenever professional accountant identifies circumstances which lead to threat, professional accountant shall determine whether such threat is at an acceptable level. Acceptable level. Threat will be considered as of acceptable level when professional accountant applies a reasonable and informed third party test. RITPT test. RITP test. And after applying these tests, professional accountant concludes that it is likely that professional accountant will comply with the fundamental principles. Reasonable and informed third party test, RITPT. In this concept, Professional accountant has to evaluate its own conclusion. Professional accountant has to think carefully whether his conclusions are appropriate. Professional accountant has to think that if the relevant information which he has is shared with a reasonable, that is fair, practical, and rational third party, whether such third party would have same conclusion which professional accountant is having. Professional accountant can apply this test either by himself by careful thinking, or professional accountant can go to such reasonable third party, inform him, discuss with him, and take his opinion. Third party need not be an accountant. He can be a lawyer, company secretary, etc., who understand the circumstances and have relevant knowledge to draw conclusions. Addressing threats. What to do if professional accountant identify threats which are not at acceptable level? Then professional accountant have to address the threat in following manner. There are three options. Option one: eliminate the circumstances, including interest or relationship, that are creating threat. Option number two: applying safeguards to reduce the threat to an acceptable level. Option number three: declining or ending specific professional activity. How to apply above options? Depending upon the circumstances and facts, professional accountant should try to eliminate the threat. If that is not possible, then professional accountant shall apply safeguards to reduce threats to an acceptable level. And even if that is not possible, then professional accountant should think about declining or ending the specific professional activity. Safeguards. Safeguards are actions which are taken by professional accountant to reduce threat to an acceptable level. It varies depending upon facts and circumstances. Hint is safeguard parade. S. Separating teams when dealing with nature matter confidential nature matters. This might address self-interest threat. P. Perform or reperform part of engagement by involving another firm. This might address self-interest threat, familiarity threat, advocacy threat, intimidation threat, and self-review threat. A. Assigning additional time and qualified personnel for the engagement. This might address self-interest threat. Or having appropriate reviewer who was not a member of the team to review the work or advise and necessary. This might address self-review threat. D. Different partner and engagement team with separate reporting lines can be used for giving assurance and non-assurance services. This might address self-review, advocacy, or familiarity threat. NOCLAR. Non-compliance with laws and regulations. Meaning of NOCLAR. In Code of Ethics, specific guidance is given regarding what to do if CS comes across non-compliance. Section 260 of Part 2 of Code of Ethics and Section 360 of Part 3 of Code of Ethics deals with it. First one, Section 260 of Part 2 of Code of Ethics, it explains how to respond when CN service comes across non-compliance by employer or those charged with the governance or management or employees of the employer. Next, Section 360 of Part 3 of Code of Ethics, it explains how to respond when CN practice comes across non-compliance by client or those charged with the governance or management or employee of the client. Meaning of non-compliance: act which is contrary to prevailing laws or regulations. It can be in the form of omission, not doing, or covering or commission against law, intentional or unintentional, by employer or its those charged with the governance, management, employees of the employer, or by client or its those charged with the governance or management or employees of the client. Non-compliance is not covered. Non-compliances in the nature of personal misconduct is not covered here, which is unrelated to business activity of the employer or client. Example: drink and drive, and forgiving, forging will of the relative. These personal misconducts are not covered here. Next, non-compliance by other parties. Parties other than those covered in definition of NOCLAR. Example: suppliers, customers. These non-compliance are not covered. Examples of non-compliance: while doing job or practice, he may come across non-compliance in the following areas: involving financial crimes, terrorist financing, money laundering, bribery and corruption, insider dealing, fraud, including falsification of accounts or financial statements, tax evasion, involving financial matters, financial products or services, data protection, other relevant laws, environmental protection, public health and safety. Objective of nuclear: CS should not turn blind eye to potential nuclear. They should respond appropriately. They should understand legal and regulatory responsibilities when they face nuclear. Further, it should be noted that prevention and detection of non-compliance is responsibility of those charged with the governance and management. Some important facts about nuclear classification. Some important facts about nuclear. No need to have higher level of legal knowledge. If nuclear is applicable, then that CS doesn't mean CS have to increase level of knowledge of laws or regulations. He is expected to have knowledge and expertise and exercise professional judgment, which is generally required to provide professional services. No duty to prevent non-compliance or investigate to detect non-compliance. Applicability of nuclear doesn't mean that CS are having this responsibility. While providing professional services, if CS comes across or is informed about non-compliance or suspected non-compliance, only then he is supposed to respond as per nuclear. If there is confusion over non-compliance, it is not his duty to determine whether non-compliance has occurred. It is the duty of court or appropriate adjudicative body. Set a non-compliance not covered. No need to apply nuclear if it is personal misconduct, non-compliance with other parties, matter is inconsequential. No need to always disclose non-compliance if nuclear is applicable. That doesn't mean all non-compliance should be communicated to appropriate authority. Only in certain situations communication is required. If law or regulation prohibits disclosure, no need to communicate. What is the difference between nuclear and SA 250? Assignments covered in nuclear, it is applicable to all the CS in service as well as practice. Further, in practice, it will be applicable to audits as well as other assignments. But degree of responsibility differs as per the role. That is responsibility. Response differs as per the role of CA. SA 250, it is applicable to CS in practice, providing audit services. Law coverage. Nuclear goes beyond SA 250. It covers non-compliance of all types of laws which may cause substantial harm in financial harm as well as non-financial. Financial and non-financial harms are both are covered under nuclear, whereas SA 250 it focuses on two types of laws having direct effect on material amounts and disclosure in financial statements. Example: tax and labor laws. Other laws which are fundamental to operations of the entity. Hence, non-compliance may lead to material effect. Example: capital adequacy ratio by RBI, solvency by IRDAI. Effect of non-compliance. Nuclear asks to evaluate effect of non-compliance on investors or creditors or employees, also general public. Stakeholders considered. SA 250 asks to consider effect on financial statements. Its fundamental assumption going concern. Stakeholders are not considered in SA 250. Disclosure to authorities. As per nuclear, in exceptional circumstances, if there is imminent breach of law or regulations plus substantial harm to investors or creditors or employees, also general public, then apply judgment and decide whether to discuss with management or those charged with the governance or directly go to appropriate authority to prevent or mitigate consequences of imminent breach. As per SA 250, we should disclose to the authority only if it is required by law or regulation. Applicability of nuclear in India. As per International Ethical Standards Board Code of Ethics, nuclear is applicable to CN service under all employers and CN practice for all assignments. As per ICAI Code of Ethics, nuclear is applicable to CN service who are senior professional accountants, that is key managerial persons under listed entities, and CN practice for audit of listed entities, and CN practice for audit of listed entities having net worth greater than equals to 250 crores. It is applicable from 1st October 2022. For CN service, Section 260 is applicable. For CS in practice, Section 360 is applicable. Responding to non-compliance under nuclear. Separate responsibilities for CN service and for CN practice. For CN service, Section 260 of Part 2 of Code of Ethics is applicable. It is further divided into two parts: responsibility of senior professional accountant in service and responsibility of professional accountants other than senior professional accountants. In case of CA in practice, Section 360 of Part 3 of Code of Ethics is applicable. Broad steps for responding to NOCLAR. In case of CA in service, obtaining understanding of the matter, nature or consequences, addressing the matter, discuss with immediate superior or communicate to those charged with the governance and ensure compliance, etc. Determine whether further action is needed, informing management of the parent entity or resigning, etc. Seeking advice, consulting internally or law firms or ICAI. Determining whether to disclose the matter to appropriate authority like RBI, SEBI, etc. Last, documentation. Matter, discussion, action need to be documented. Documentation requirements. As per revised Code of Ethics, NOCLAR, how management or those charged with the governance responded need to be documented. How CAs made judgments, took decisions, and decided course of action need to be documented. How CAs ensured that responsibility of public interest is fulfilled need to be documented. As per standards on auditing, as per SA 230, non-compliance is a significant matter and following should be documented. Prepare documentation for understanding significant matters and significant professional judgments with respect to significant matters and conclusions reached. Document discussions of significant matters with those charged with the governance or management, including with whom, when, and nature. As per SA 250, document identified as suspected non-compliance, discussions with those charged with the governance, management, and other parties, and conclusions reached. CA Act Section 2, Subsection 2, deemed to be in practice. CS deemed to be in practice. Majority of the provisions of CA Act are for CS in practice. Some CAs may do practice related work without taking COP so as to avoid provisions of CA Act to ensure that all the CAs who are doing practice related work are governed by the provisions of CA Act 1949. Concept of members deemed to be in practice is created. It simply gives list of activities. If CAs are involved in these activities, they are deemed to be in practice. Important condition: CA, whether individually or in partnership with a CA or other prescribed professionals, will be deemed to be in practice for performing these activities for remuneration, received or receivable. Further, if CA is performing these activities as employee to an organization, then this deeming fiction will not be applicable. That means it should be given in his professional capacity and not employee capacity, or a professional capacity nature helps to friends and relatives and social worker. So a CA will be deemed to be in practice if he has done anything for consideration and in professional capacity. Personal capacity is not allowed. If he is done in personal capacity, he will not be deemed to be in practice. Section 2, Clause 2, practice related activities, describes himself as public accountant, sets up office for practice, offers to perform or performs any work related to accounting, including advisory, or auditing, including any verification or certification. Services related activities, working as employee with CA or firm in practice. This is for limited purpose of giving right to train articles and not to put any other obligations under CA Act. CA in service with armed forces. Section 2, Subsection 2, Clause 4. This clause gives powers to Council of ICAI to increase list of activities. Regulation 191, individual related executor, trust related trustee, company related receiver liquidator, dispute related administrator arbitrator, advisor related advisors, or representative for costing, tax, and financial matters. Special appointment related. Appointments made by central and state governments or courts are to act as secretary in various ministries of the government. If any of the above activity is on salary come full-time basis, then deeming fiction will not be applicable. Management consultancy services. Importance of MCS list. CS who are providing these services will be considered in practice. CS who provide management consultancy services will be considered as they are in practice. It also defines a range of services which can be given by CS in practice. Management consultancy services. ICAI issued list of management consultancy services as per power given in Section 2, Subsection 2, Clause 4. Corporate firm. MCS, management consultancy services, can be provided in traditional form of practice, that is a proprietorship or partnership, or it can be given by forming management consultancy company. Following activities does not fall under management consultancy services: statutory or corporate form periodic audits, tax advisory or representation, direct or indirect tax. A list of activities given in Regulation 191 above. That means these services cannot be provided by management consultancy company. Also, management consultancy company cannot provide accounting services as prohibited under Section 25 of CA Act 1949. So, management consultancy company cannot provide auditing services, taxation services, Regulation 191 services, accounting services. List of management consultancy services. Project reports and feasibility studies, capital structure planning and raising finance, valuation of shares, registered valuer, acting as advisor to public, acting as registrar to issue and share certificate, planning, business planning, corporate planning, organization development, budgets, capital and revenue budget, cash budgets, personal recruitment, training, organizational structure and development of human resource incentive plan, administration service, assisting client with their routine or mechanical tasks, and such services include word processing services, preparing administrative or statutory forms for client approval, monitoring statutory filing dates, and advising client, submitting such forms as instructed by the client. Example functions of GST practitioner as per GST rules 2017. Working capital management, inventory management, handling or storage, management accounting, and MIS, that is cost accounting, cost control and methods, and MIS, value analysis, pricing, market research and demand studies, price fixation and other decisions, acting as a recovery consultant in banking sector, statements, profitability statement, funds flow statement, cash flow statement, money management and investment and valuation, financial management and policy, investment counseling, amalgamation and merger, special audits, management and operational audit, quality audit, energy audit, environmental audit, system and insurance, system analysis, insurance financial advisory, liquidation, insolvency professional. For financial management and policy, for working capital management, and for project reports and feasibility studies, and capital structure planning and raising finance, tax advice will be covered in MCS, management consultancy services. For acting as advisor to public issue, prospectus or publicity as selection of agency or post issue matters are covered. Investment counseling is not covered in MCS, management consultancy services, broking or underwriting or portfolio management. So a CA cannot provide portfolio management services, underwriting or broking services. Section 4, who can become member? Regular route, pass such examination and pass such training. Foreign route, pass such examination and pass such training without India, that is outside India, as recognized by the central government or council as equivalent. Concept of direct membership and MOU based membership. But in India, direct membership is not allowed. Fees. Maximum fees is 3,000. If approved by central government, it may go up to 6,000. Section 5, associate versus fellow chartered accountant. Associate member, as soon as name of the person is included in membership register maintained by ICAI, person becomes associate member. Fellow member, Associate member has to apply to become fellow member. Fees should not exceed 5,000. If prior approved by central government, it may go up to 10,000. Who can apply to be a fellow member? Associate member plus continuous practice in India for 5 years. That person can apply for fellow membership. Foreign practice will not be counted. Associate member for at least 5 years plus qualification as prescribed by council to ensure that experience and knowledge is equivalent to CS in practice for 5 years. He can apply for fellow membership. I say requirement with respect to qualification required to become FCA. CA should be in job in government entity for 5 years, continuous, or in a commercial entities or statutory authority or local bodies in the area of accounts, tax, cost, company law, IT, secretarial position, etc. or pursuing job under practicing CA or a CA firm. Break of 1 year can be condoned or experience can be partly in practice and partly in job as specified above. Important point is foreign practice will not be counted for calculating number of years of practice in India. Next, section 6, significance of COP. It is mandatory to take COP to practice in India or elsewhere. Practicing outside India. COP is mandatory even if you are practicing outside India. In this case, CS will be governed by ICAI professional ethics as well as law applicable in foreign countries. If there is conflict, then CA should get clarity from ICAI. Temporary suspension of COP or membership. Once per person becomes member of ICAI, he is bound by provisions of CA Act 1949, even if there is temporary suspension of COP or membership. That means even during suspension period, he cannot perform CA related activities as discussed in member deemed to be in practice in any other capacity, such as lawyer, CS, GST practitioner. It is mandatory to have COP to provide CA related activities. Working as employee. If CA is doing CA related work for employer, such as appearing as representative before tax authorities, then CA will not need COP because CA is working as employee. Services given to other. If CA employee is giving services to others, then CA is working in professional capacity and CA will need COP before giving services to others. Dual COP. To have dual COP of professional bodies, permission is required from both the professional bodies. ICAI has given permission to have dual COP with Bar Council of India, but Bar Council has not given such permission. So practically, it is not possible if if dual COP is allowed by both the professional bodies, then in such case, we should not use both the designations together. Initials can be used, but designations cannot be used. Cancellation of COP for following reasons under Regulation 10. Name of the holder removed from the register. Certificate issued on the basis of incorrect, misleading, or false information. Annual fees not paid till 30th September of the financial year. Members surrendered COP or COP is cancelled. In all such cases, COP will be cancelled. Restoration of COP. If application is made in prescribed form along with the fees, COP will be restored. If fees is paid before the end of the financial year, then COP will be restored from the same date on which COP got cancelled. Important point is during the period of temporary suspension, CA will be governed by CA Act 1949. In the temporary suspension period also, he will be governed by CA Act 1949. Next, section 7 related to prefix, designation and other description. First, prefix. Allowed. Person who has acquired membership of ICAI can use prefix CA irrespective of whether he is in practice or not. He can also use prefix DR as per his discretion. He may use DR CA first or use only DR. So writing prefix is not an obligation. Not allowed. CA student. Students who are yet to complete final exam articleship, or other training are required as required, or has not received membership number from the institute should not use prefix CA in any communication or social media handles. Requirements not fulfilled. If members don't fulfill requirements such as paying membership fees on regular basis, then they should not use the word should use the prefix CA. Next, designation allowed CA in practice. CA in practice shall mandatorily use the designation chartered accountant. No adding, no addition, deletion, substitution, modification allowed. CA not in practice. CA has option whether to use chartered accountant as designation. Option number one. If we use designation as chartered accountant, no changes allowed as explained above. Option number two. If he doesn't use designation chartered accountant, then he is free to use any other designation or description. Not allowed. Modifications. Modifications like industrial accountant, cost accountant, CA first attempt, income tax consultant, management consultant, not allowed. Merchant banker, CA or CA firm can get themselves registered as merchant banker with SEBI. In such case, in prospectus, they can write advisor or consultant to issue below their name, but on the letterhead, visiting cards, they should use chartered accountant as designation. Other descriptions are letters, qualification, and membership. Indicating membership or qualification of other accountancy bodies, whether in India or outside India, allowed only if recognized by council on this behalf. CMA. CMA is allowed. CA member cannot designate themselves as cost accountant. They can use the letter ACMA, associate or FCMA, after their name to indicate qualifications. MOU or MRA. CS can mention membership or qualification of foreign accountancy bodies with whom ICAI has signed Memorandum of Understanding or Mutual Recognition Agreement (MRA). Dual COP. If CA is allowed to keep dual COP by both respective institutions, as the case may be, other institutions like ICSI, Bar Council, Cost Institution, then such members can use designations such as company secretary, cost accountant, or advocate, but these designations should not be used along with designation chartered accountant. Either the designation should be used or chartered accountant should be used at a time. Both should not be used at one time. Not allowed. CPA not allowed. ICAI has not yet allowed to use designation CPA in description CFA. ICFAI is also considered as accountancy body by court, and no membership or qualification can be mentioned because it is not allowed by ICAI. Next, directorship or position. Members in practice should not mention their directorship in companies or position in political parties or position in any club or other organization. So CPA, CFA, director designations are not allowed. Next, qualification or membership other than from accountancy bodies. Following qualifications are allowed. Qualifications such as LLB, BCom, MBA, and other such qualifications are allowed. Insolvency professional. Member in practice who are empaneled as insolvency professional can write insolvency professional in other descriptions. He should not use any other nomenclature or designation, and he should not mention other insolvency professional agencies like CS, CMA. Registered valuer, member who is registered with Insolvency and Bankruptcy Board of India or as registered valuer can use other description as registered valuer. Designation of CA firm. CS can use the designation chartered accountant below their name if all the partners of firm are chartered accountants in practice. So other qualifications, LLB allowed, MBA allowed, insolvency professional allowed, BCom allowed. Next, section 8, disqualification for ICA membership. He has not attained age of 21 years, disqualified, adjudged, that is decided by the court as person of unsound mind, disqualified, undischarged insolvent, declared insolvent but not discharged, disqualified, discharged insolvent but not having certificate stating misfortune, not misconduct, and convicted by court in or outside India for moral turpitude, punishable with transportation or imprisonment, disqualified, Exception: this disqualification will not be applicable if conviction is for technical procedures not followed, non-compliance committed by professional capacity in professional capacity, non-compliance committed in professional capacity, granted pardon by victim, central government removes disability. In all these cases, disqualification will not be applicable. Removed from membership for specified period, disqualified. When person applies for CA membership, he has to specify whether he is disqualified. If person gets disqualified, then he is supposed to himself inform ICA about the disqualification. When person gets disqualified, his or her name gets removed from register of members. For knowledge, when person is not able to pay his or her liabilities, negative net assets, person cannot go to court and prove that his or her liabilities are more than assets, then court will declare him insolvent. Further, person can request court to take control of the assets and sell them and pay creditors and discharge him from any unpaid liabilities. When court completes this proceeding, then person is called discharged insolvent. At the time of getting discharged, court may give him certificate that insolvency happened because of misfortune, not misconduct. Section 20, removal of name from register. Following are the reasons for removal. F. Fees. Annual membership fees not paid. Not paid. D. Death. Next, disqualified under Section 8 to be member whether at the time of receiving membership or any time after that, or removal of name from register as per the order passed by under CA Act. Request received to remove name from membership register. Restoration. Person can apply for restoration of membership. If eligible, he will have to send application in prescribed form and pay arrears of annual fees and additional fees as decided by ICAI. Effective date of restoration, same financial year. If application for restoration and fees as described above is paid during the same financial year, then restoration will take place from the date on which it was removed. So there is no break in continuity. Removal of name under the order of High Court or appellate authority, disciplinary committee or board of discipline. Restoration will take place as per respective orders. Different financial year, restoration will take place on date on which application and fees are received. Authorities involved in disciplinary proceedings. These are similar to civil court powers. In ascending order, disciplinary directorate, section 21, board of discipline, section 21A, disciplinary committee, section 21B, appellate authority, section 22A and to 22G, section 22A to 22G. All of them will have same powers as vested in civil court. Vested in a civil court under Code of Civil Procedures, Code of Civil Procedures 1908. The important point is there is a merchant banker in prospectus. He can mention as advisor to issue, but in the letterhead or visiting cards, chartered accountant designation is must. He need to mention chartered accountant designation only in letterheads or visiting cards. Disciplinary procedure mechanism. On receipt of a complaint along with prescribed fees or information against member of ICAI of alleged misconduct, disciplinary directorate will conduct a prima facie opinion. If he is guilty, if CA is guilty, falling in first schedule, place the matter before Board of Discipline. If the matter is accepted, conduct inquiry, found guilty, then it can Board of Discipline can reprimand the member, remove name of the member up to a period of 3 months, impose fine up to 1 lakh. Place the matter before the Board of Discipline. If the matter is rejected, close the matter. Any member or director of the discipline agreed by order of board or disciplinary committee can prefer an appeal within 90 days. Appellate authority, it can confirm, modify or set aside the order, impose, set aside, reduce or enhance penalty, remit the case to the Board of Discipline or disciplinary committee for reconsideration, pass such order as the authority thinks fit. Next, on receipt of the complaint, along with prescribed fees or information against a member of ICAI of alleged misconduct, disciplinary directorate will do prima facie opinion. If the CA is guilty, falling in second schedule or both, place the matter before a disciplinary committee. If the matter is accepted, conduct inquiry, found guilty, then that CA will be reprimanded. The member disciplinary committee can reprimand the member, remove name of the member permanently, or for any duration it thinks fit, impose fine up to 5 lakhs. If the matter before a disciplinary committee is rejected, close the matter. If any member or disciplinary director agreed by orders of the board or disciplinary committee can prefer an appeal within 90 days to the appellate authority. Appellate authority can confirm, modify, or set aside the order, impose, set aside, reduce, or enhance penalty, remit the case to disciplinary committee for reconsideration, pass such order as the authority thinks fit. Next, on receipt of the complaint, along with prescribed fees or information against member of ICAI of alleged misconduct, disciplinary directorate will make prima facie opinion, will obtain prima facie opinion if he is not guilty. If the CA is not guilty, submit all information and complaints to Board of Discipline. If that information and complaints to Board of Discipline is accepted, close the matter. If it is rejected, advise the disciplinary director to further investigate. May proceed with the matter if it's allied to the first schedule. Refer the matter to disciplinary committee if it's allied to second schedule or both. So matter pertaining to first schedule will go to Board of Discipline. Matters pertaining to second schedule or both will go to disciplinary committee. So they will decide the consequences. Next, section 24. There is a non-CA. He claims to be CA or uses designation CA. There is a CA but not having COP, claims to have COP or does CA practice. Or there is an institution other than ICA claims to give CA equivalent degree or uses a similar seal or name or claims to regulate profession. In all such cases, in case of first time conviction, the fine is 1,000. For second time conviction, the fine is 5,000 or imprisonment of 6 months or both. Section 25. CA incorporates company for accountancy is prohibited. Fine for first time conviction 1,000, for second time 5,000. LLP where one of the partner is a company cannot practice as CA and to provide accountancy related services. That means only those LLPs where none of the partners is company can practice as CAs. In case of contravention, first time fine will be 1,000, second time it will be 5,000. Next, section 26. Non-CA signs any professional document on behalf of the practicing CA or firm, that is forgery. In such a case, first time fine will be 5,000 to 1 lakh, second time fine will be 10,000 to 2 lakhs. Section 27. Maintenance of branch office requirements. CA or CA firm can open any number of branches in India, but one of the important condition is that there should be separate in charge for each office. Separate in charge should be CA in practice or may not be in practice, associated as partner or full-fledged full-time employee of the firm. He is actively associated with such office. Active association is deemed if member resides in same place where office is situated for a period of not less than 182 days in a year, or CA should attend such office for not less than 182 days in a year, or active association can be proved in any other manner. Also, example, giving regular instructions, discussions, review, and exchange of documents, etc. But in this case, Executive Committee of ICAI should accept it as active association. So main important point is any number of branches is allowed provided a CA in charge should be there for each branch. Exemptions, second office. CA in practice can have second office without separate in charge provided such office is located in same premises, located in same city, located within 50 kilometers from municipal limits of the city in which first office is located. CA practicing in hilly areas subject to certain conditions. Temporary office can be opened in plain areas near hilly region for period not exceeding 3 months. Before commencement of every winter, CA in practice should inform of opening temporary office from a particular date and also inform ICAI after office is closed. Such communication should be sent by registered post to ICAI. It means office can be opened in winter season, but ICAI is in one of the answer assume that office can be opened in any season. Only communication should be before winter. We think view taken by BOS is not correct, but if in the question comes in the exam, present both views. A regular office need not be closed. Name board of the firm need not be displayed at temporary office. Name of the temporary office should not come in visiting cards or any other documents when original office is not functional. That means on visiting cards or other documents, a regular office address is only allowed. Next, same member can be in charge of two offices if they are located in same accommodation. Clarification with respect to name board. CA can put name board at his residence with name and designation, but CA cannot put name of the CA firm. Important point is sometimes in the question, distance is given from the main office and not from the municipal limits of a city in which main office is situated. In such a case, students should assume that this distance is from municipal limits, not from main office, as if is of no use. Next, section 28A to 28D, Quality Review Board. Quality Review Board contains chairperson, 10 members who has knowledge of economics, finance, business, accounts, and law. Out of 11 members, 5 members will be nominated by ICAI and 5 members plus chairman is nominated by central government. Functions of Quality Review Board. A review of services provided by CA, guides CS to improve quality, recommendations to council to improve quality. Important point, personal name board is allowed at house, not firm name. Firm name is not allowed at house. Types of unethical activities. In first schedule and second schedule of CA Act 1949, list of activities is given which are considered misconduct, wrongdoing, or unethical, irrespective of what was the intention and whether or not any person is harmed. If CA has done any of these activities, then CA will be deemed to have conducted misconduct. Professional misconduct. There are two types of misconducts: professional misconduct, other misconduct. Professional misconduct acts which will be deemed as professional misconduct are given in Schedule 1, Part 1, Part 2, Part 3, and Schedule 2, Part 1, Part 2. Other misconduct. List of activities considered as other misconduct are given in first schedule, Part 4, and second schedule, Part 3. Other misconduct. As per past cases, Section 22 explains that list of professional and other misconduct in the given schedules. It further says that disciplinary directorate can exercise his power to collect information and to do investigation as given in section 21 subsection 1, section 21 subsection 1. In any other circumstances, if appropriate, proceed ahead with the case for other misconduct to board of discipline or disciplinary committee. Earlier, this power was exercised by court and the council of ICAI. List of instances which were declared as other misconduct is given below. Other misconduct as per past decided cases. A. In anger, CA has used some objectionable or derogatory or abusive or insane comments. It will fall under other misconduct. Next, publishing advertisements with malified intention to malign any person. Other misconduct. Used service of article for running other occupation or business. Other misconduct. Example, agriculture, election work. Submission of bogus bills and receipts and claim expenditures during bank audit. Other misconduct. Coercion for payment of fees. Other misconduct. Where a chartered accountant had adopted coercive methods on a bank for having a loan sanctioned to him. Other misconduct. Returned books and failed to return without reasonable cause. Further, as per ESB announcement, a chartered accountant cannot access the lien over the client documents or records for non-payment of his fees. Next, manipulating minutes book of the company, giving fake documents to client claiming that they are issued by ROC, issue of fake experience certificate to other person, forged will of relative, grossly negligent as employee, fake experience certificate while applying for job, Next, misappropriation of ICA funds for personal purpose. Next, checks given by NBFCs bounced because of lack of funds, where CA was managing director as per Negotiable Instruments Act 1881, not replying to authorities, that is export authorities, other misconduct, unauthorized position of government records, other misconduct, authored book on tax for secret income, black money, other misconduct, CA filed 2 returns of income to evade tax during manual filing time, other misconduct, fabricated challan of advance tax of client, encashed it by opening fake account of the client, other misconduct.